Welcome back to the Beat the Odds of Business and Wealth podcast, Trevor. I'm back in the office here. Good to see you in person again.
Yeah, good to have you back. Today's episode, let's get into it. I think it's pretty exciting, that they made the announcement of the rate cuts, but
a shocking admission. Shocking admission. Yeah. You're starting to hear these now. Like, you're starting to hear these, when we started telling people about this, the outset was, there was the people who said, oh, that's a conspiracy. You're just rage baiting. I was like, no, they're starting to say the quiet parts out loud now. And, this recent policy announcement, there was a really poignant question and a really telling answer. And we've had some clips. I've seen some small clips of it, but I'm going to play the whole question and answer so people get some context on it, right? And so this is Tiff Macklem, and he's doing his press conference on the Bank of Canada's rate cut from 2.5 to 2.25. Okay, so we got that out of the way, because I think we were sitting here a year and a half ago or 2 years ago, and we were playing the over/under game on 2.5 because the banks at the time, the commercial banks at the time, were projecting at a mean 2.5, and I said under. Right, here we are at 2.25. So we made it right on the second last announcement. So it was close, but we made it. So here we are. But I think the more telling part is the answer this question. And the answer to this question. So I'm going to play it for everyone out there.
All right.
And then we'll break it down for you.
Sounds good.
Hi, thanks for taking our questions. Given the close trading relationship that we have with the United States, what do you see as the most concerning long-term impact of Trump's trade policies? And also, what is your message to struggling businesses and job seekers about how bleak the economic forecast is?
Well, maybe we'll tag team on this one, but look, I think, the reality is, open trade with the United States has benefited both our countries for many years now. It allows for a more efficient allocation of production. It allows us to specialize in the production of certain goods, export those, import goods from the United States that they specialized in. We can both benefit from economies of scale. We can benefit from expertise, different resource endowments across the country. Increased trade friction with the United States means all that works less efficiently. And unfortunately, what that means is that unless something else changes, our incomes will be lower than they otherwise would have been. They'll grow, but they'll grow along a lower. This was the old path. Now there's a new path, which is below the old path. There are things the country can do to try to bend that curve up, but those aren't things monetary policy can do. These are more structural changes. I mean, fundamentally, as a senior deputy governor has hammered many times, we need to get our productivity growth up. And if we can do that as a country, we can bend that curve up. So, I mean, I think what's most concerning is that unless we change some other things, our standard of living as a country, Canadians, is going to be lower than it otherwise would have been.
There it is. Standard of living as Canadians will be lower, right?
Yeah.
It's a pretty big statement by the governor of the Bank of Canada to say that it's predicted to be lower. Now, there was a lot of preamble to that on Orange Man bad, and it's because of tariffs, right? Mm-hmm. And it's not to say that tariffs don't affect Canada, but I think people, most Canadians fail to grasp the productivity challenge that existed long before Trump even took office. The first or second time, dating back more than a decade, right? Where GDP per capita starts to fall off a cliff, right? In and around 2015 with Trudeau taking office and the downturn in energy prices. So, and that becomes an inflection point. And so you're starting to see these announcements here. And I think, you had just a couple weeks ago, you had the Parliamentary Budget Office come out and say, that this is a completely unsustainable path, right?
Yeah.
We had a previous episode on, this was Policy Canada and their projections for 2040, and we went through it in detail on one of our podcasts here.
Yeah, I remember that, and they're dripping it out step by step, a little bit here, a little bit there, that things are not going to be great here in Canada.
Yeah,
they're getting worse.
And it's sandwiched in between a whole bunch of I feel like a whole bunch of divisive things, because when you start looking at the root of the core issues, it starts to become a lot more clear, right? This Policy Canada one, it was, for those of you who didn't watch the episode, it talks about, breakdown in social fabric systems. So like people no longer trust higher education as a path to social mobility, and things like, the increase of foraging for food on public lands is going to increase. Like, it was really dark and bleak, and it's not this is not a conspiracy theorist website. This is the government of Canada. We're seeing this. So we're seeing the governor of Bank of Canada, talking about a declining quality of life. We're talking about the parliamentary budget officer talking about an unsustainable path. We're talking about Policy Canada talking about a breakdown of the social fabric, and people starting to question even the possibility of upward social mobility. These are real things that are happening, but they get maybe like 1% of the coverage. If the 99% of the coverage is just orange man bad, left versus right, divisive issues on
Indigenous land
abortions,
claims.
Indigenous land claims. Yeah, like that'll be the 99% of the coverage, right? But in between it, you get the 1% of the stuff where I think is like, it's real, where the real issues lie.
And this existed before the election. All these things coming out, especially this report here, which is very bleak and very, very sad, actually, about the future of what's happening in Canada.
Yes, this had nothing to do with Trump getting elected or tariffs. No. Zero. Like, this was a projection for the future, looking forward. Long-term projection, right? When I say long-term, I mean more than 10 years, right?
So how are your foraging skills, by the way?
My foraging skills. I'm going to play a different game, right? I'm going to play a different game.
We're not going to play Hunger Games?
I'm not planning on playing Hunger Games, although I have the notice from the RCMP saying I have to renew my firearms license, so that's okay. Coming up here. So we got to do that. All right. But I'm not planning on. That's a plan F, Trevor. Like, we're going to try to avoid that one.
Down the path.
It's about beating the odds at business and wealth here. So that's the main goal. So
all right.
You start to look at it, and I think when you drill into the report, because they actually give you their monetary policy report, it's like, here you go on page 4 of their report. It's like, it talks about the decline in exports that pulled GDP down in the second quarter of 2025. Okay, and it says exports on the second quarter of 2025. Sure, but I would suggest, like, most of the tariffs didn't happen until March of 2025. Like, most of the tariffs didn't actually happen until 2025. But what you really have to look on here is, I want you to look at this red color here. See this red color here? Business, fixed, investment. Okay? So this isn't just building bigger and bigger, building more and more houses to trade back and forth to each other. This is actually investing in for-profit companies that produce goods and services. So that actual investments that helps them be more productive. And at most, this thing is like, a sliver. Often it's negative. So when it's negative, it means we're investing less and less as a percentage of GDP on business fixed investment. So we're actually less, and you start to see it's like looking out. It's like it's expected to be more negative this year, remaining this year, and moving forward even that. And so, effectively, like, why don't we have the same productivity growth in Canada? It's like, well, I mean, to me, it's like it's two reasons. Like, we just don't. When you look at capital expenditures by employee and you compare us to the U.S. or other G7 countries, it's like, we just don't invest the same dollar amount. Okay. Two reasons. It's because, well, on a big business side, if I point towards, page 7 in their report, and I'll just pull up page 7 of the report so people can see this here. Let's just see. It's like this is saying tariffs continue to weigh on the export of goods, but it's starting to say, which industries. So they have sectors affected by specific tariffs, and then they have remaining sectors, and then they have energy. So what is the only one that's having a positive effect on, a positive effect on the economic output? It's only energy. It's the only thing. Like both the industries that are directly affected by tariffs and the ones that are indirectly affected by tariffs are negatively affected. And so, which ones are still providing growth to the upside? It's energy. So we still have stuff in the ground that the rest of the world wants, but from a big business side, it's too risky. Big international capital, by and large, will not flow here because it's very difficult to get these big projects approved. So that's
a big problem.
Why isn't the big institutional money coming in? It's because of that, right? Because the industries that are very profitable and very let's just say low risk are become high risk because of government intervention. Okay, so you have that. Okay, but then why does this not happen on a small business side? And I say like small business, and people don't realize that, roughly half the jobs in Canada are created by small businesses. That is next to impossible to borrow capital for small businesses, right?
Exactly.
Like the strategies that we have to come up with are, kind of crazy when you compare them to what they have available in the U.S. When you start to compare the Canada Small Business Financing Program to the U.S. Small Business Administration, it's never talked about. I never hear anyone talk about it. Not the Liberals, not the Conservatives, not the NDP. It's like I don't even think they understand it at all. That small businesses can't borrow capital for the investments that they need in the businesses. Heck, the people who run the small businesses can't even get approved for mortgages lots of times. The people working in the small businesses have a better chance of getting approved for the mortgage than the people who own that business, right? It's almost like it's just comically bad. And you start to see this. It's like the investment in business fixed investments, these are things that would actually, in a long-term basis, increase the productivity, are shrinking or either non-existent or shrinking. And so to me, that's a real problem, and it's kind of telling, right? So that's kind of, one aspect of it, but I want people to dispel a bit of the myth that somehow our productivity, like all of these issues were tariff related and Orange Man bad. That these issues existed long before, but it's good to have politically speaking, it's good to have a kind of a common enemy because you can avoid responsibility for the problem that actually existed.
Well, we talked about this before, right? They're trying to point the finger at Trump, trying to point the finger at tariffs or China or whatever, when really as a country, we've been under poor management for decades.
Yeah.
And, it's going to take a generation to fix that, or somebody with the will to actually, make the hard calls that are unpopular in order to turn this ship around, because we've got so many resources that this country could be like one of the top and most rich country in the world.
Yeah.
If only we had the leadership to make that happen.
I would suggest the leadership happens after the understanding of the general public. So at this point, even if the right leader appeared with the right policies, it will be so misunderstood and so negatively viewed by the general public because their understanding of the issue is so low that the leadership is somewhat impossible. And so I think the change actually happens here. It happens for the viewers of this show by actually getting educated on what's actually happened, right? And I'm going to drill through some numbers because I think a lot of the numbers that you see are very, like the numbers you kind of want to see. Like, for example, even like just real GDP. It's like, okay, did you notice in the Bank of Canada, the entire report that we got, they didn't give you nominal GDP? Not once. Like, and I'm not saying that, people will say, well, real GDP is more important. Well, how did they arrive at the calculation? what was the nominal GDP and what was the GDP deflator that we're supposed to use, in terms of arriving at that report. It's like, I kind of want to know, not because I don't want to understand real GDP. I want to understand if their version of real GDP is real, right?
Right. Yeah.
And so when you look at GDP, it's a hard enough number as it is, but the GDP deflator is kind of like the equivalent of the CPI for GDP, okay? Because CPI is a consumer price index, mostly on consumer goods, but the prices of all the goods and services that make up GDP, we need to understand that on a real basis. Okay, so I would want to see actually what that nominal GDP projection is, and it's not there. And I think the largest variable that they don't talk about enough is what about the M2 money supply itself? What about the number of dollars in existence that we're talking about, right? So what is that actually, right? And so I'm going to drill through some numbers that I think are going to be interesting, because I think this is where the change starts, where where it becomes 51% of the population actually starts to understand the real numbers. Rather than the divisive issues, they just go to the real numbers and just stop talking about this. It's like, this is what really matters.
Well, one problem with that is, with the media landscape in Canada, most of the people who are the voters and the people who hold most of the wealth right now, they watch the mainstream media, CBC, and they're not talking about these issues. They're not revealing these things. So you have to go to private media, you have to go to podcasts like this that actually are talking about the real problems and potential solutions, right? So let's jump into these numbers and see what we can see.
First one is population. Okay, so the first one is population, because whether you're talking about nominal GDP or real GDP, neither of them reflect population growth. You should have both nominal GDP increase and real GDP increase with population growth, all else being equal, if those workers were, if those people coming in were getting jobs and were equally productive. That's the part. It's like, real. Is it really real? Because if you increase the size of your population, you would get real GDP growth, even though everyone's share of the pie, their size of their piece of the pie gets smaller, okay? Because real just considers the price increases of those goods and services. It doesn't consider the number of people involved in producing that gross domestic product, okay?
Right.
And that's an important part. So we're talking in between Q2 2024 to Q2 2025, and largely Trump takes office in January, but most of the tariffs take effect, in March. Largely, okay? So largely unaffected by that. You're going to see the real effect, I think, in Q3 when it comes down. But in that time, you had the Canadian population grow from 40,990,000 to 41,604,000. Okay, so you're looking at 614,000 new people that came to Canada in that 1 year span. Okay, that's an increase of 1.5%. Okay, 1.5%. Okay, interesting. Now let's look through the other labor numbers. And I tell people, it's just like unemployment. I want to understand the unemployment number because I know it's used lost in policy numbers, but I'd rather know the number of full-time jobs. Because unemployment, you have to, by nature, estimate the number of people looking for work. And you have to try to parse out the number of people that are underemployed. They're working part-time because they can't get a full-time job. But full-time jobs, no number is perfect, but I'm looking for the numbers that have the less estimates involved, right? Same with, I actually want to understand nominal GDP. It's not that I don't want to understand, know real GDP, but for a lot of respects, the real GDP is the warning light on the car. Once I see it, I want to go back and look under the hood to see exactly what's happening, okay? So you look at the number of full-time jobs, okay? This increases from 16,566,000 to 16,760,000. So that's an increase of 194,000 full-time jobs. Okay, but it's at a time where the population increased by 614,000. So the population goes up by 614,000, and the number of full-time jobs only goes up by 194,000. Okay. Now you're starting to see, what's happening here, okay? And it comes down to, he said it, it's productivity. It was it was hid in a lot of, the preamble, but you can see the productivity glaring weaknesses. Okay. Now you get into wages. Okay. And these are all Stats Canada sites, people. It's like, I think the published reports with the actual numbers, like we should still be skeptical of them, but they're far more reliable than the talking heads on CBC. Like just far more reliable. You'll get to the root of the issue if you start looking at the numbers. Okay. They just talk about wage growth and population growth, but no one actually says the number. Like it's very like empty commentary because they just never talk about the numbers, right? Because if you start to talk about the numbers, people would start to get pretty irrefutable positions that would develop, right?
It's easier to hide if you don't show the numbers.
That's right. It's easier to argue in spirit than in numbers.
But
right?
the numbers are available on the website if you just go and look for it. So
yes,
let's dig in and see what else we got here.
Now I'm looking at wage growth. Okay, so wage growth, we know that the number of jobs available is not increasing with population. It's like maybe it's wage growth, but in this time, the median income, the median hourly wage goes from $30 an hour in March of 24 until $30.40 an hour in March of 2025. And I would say that's largely before the impacts of tariffs took place. And it's like, look, there was no wage growth leading up to this either.
No.
There's like election happens, the U.S. election happens here, people. It was $30 an hour. There was zero wage growth. That can completely flatlined. Okay. And so that's an increase in wages of 1.3%. And, we're very critical all the time where we tell people like that CPI number, the consumer price index, whether you look at the CPI number or core inflation or whether you look at what we try to teach people in the boot camp, real inflation.
Yeah.
By any method, 1.3% is not keeping pace with any type of inflation.
Yeah. I was just going to bring that up. It's like, okay, so we've had flat wages and a tiny, tiny little increase here, year over year, 40 cents. But how much has the increase in prices at the pump, in the grocery store, and everything that we buy and use, that has gone up.
That's right.
And that doesn't even keep close. Like the wages don't even keep close to the rate of inflation.
That's
currently. And they haven't for years.
Yeah. And it's just because there is no productivity growth. Like there's none, zero, right? It's really, I was likening it to, I told you, it's like a Band-Aid, right? It's like we have an alcoholic and rather than fix the problem and get the alcoholic to stop drinking, the solution has been to import low-skilled workers to prop up our Ponzi of, the social systems that we have, whether it be CPP or healthcare and stuff. But it's like, it's not fixing the problem. It's just like giving them another drink or two in the morning so they stop shaking so they're somewhat functional for the day. But we're not addressing the problem at all. We're just actually making it worse in the long term, right?
Mm-hmm. And that's a perfect analogy. Like we're not fixing anything by importing all these low-skilled workers. It's not good for the country. If people were coming here and they're being productive, back when my grandparents, immigrated to Canada, they came here, they weren't given anything, right? They had to work for it. They had to, have money. They had to purchase land. Anything they wanted, they had to earn it. And then they became part of Canadian society. They came to actually build something, create a farm, create a family. People coming today get instantly put onto social services. How does that really help us in the long run? If they come here and they want to be productive, great. If they want to come here and just go on social services because there's no jobs for them, that helps nobody. It props up the numbers. It makes them, look better than they really are, but it's not fixing the core problem. And that's really what we have to do. But, on the other side, we do have a way out.
Yeah. It adds to GDP. Okay. But it takes away from GDP per capita,
right? And
it strains the social system. Like you start going back to even their report, it's like, where does a lot of the growth in GDP, what they call GDP, real GDP, come from? It's like, it's increased government spending. Look at the yellow line there. Look at the yellow bar in relation to the red bar, which we need to be increasing business productivity, not, the proverbial, power bar plugged into itself, which is, more government spending.
And the other one there is consumption. Like consumption's going and then government spending.
Yes.
Okay.
And, consumption being like, to me, I think consumption's kind of fine. Like that is the goal, that Canadians have more for consumption, right? But they will never have more for like real consumption unless the businesses become more productive, right?
Yeah.
And unless you have the right skilled workers, and those skilled workers have the tools to succeed in their business, right? Then they can actually produce the goods and services that people want more efficiently, okay? So you look at that, and then the last thing to look at is just like the GDP. So like what is the GDP? It's like, here is the gross domestic product. You know, you go from 3 trillion and 55 billion. 3 trillion and 55 billion. And I'm trying to keep all these periods consistent because we don't have our Q3 GDP number yet, right? So I'm looking at all, even though we have some of the other ones, we have the wages and things like that a little more frequently. Let's keep them all consistent here. We go from 3 trillion 55 billion to 3 trillion 162 billion. And so you have GDP growth. I mean, it looks really dire in the last bit because you had 3 trillion 175 billion. So you actually had a nominal decrease. Forget about real, just a nominal decrease in GDP from 3 trillion 175 billion to 3 trillion 162. Okay, so now we're wondering, are we going to get 2 quarters of negative nominal GDP? Could happen, right? Because they're projecting somewhere between, very low growth. So whenever it's low growth, it could very easily just be negative growth, right? Yeah. And of course, they will blame tariffs.
Of course, yeah. You have to blame the boogeyman. They got to blame Trump.
Yes. And
there are rumors out there. I don't know if there's any validity to them, but rumors are that with the presentation of this budget, it's not going to be passed, and then we're going into a Christmas election.
Yes.
It's been rumored. I think they're trying to get a liberal majority, so they have to continue, making sure that things are as hard as possible, and we can blame the orange man bad in order to win that super majority for the Liberals, so they can.
It worked last time,
right?
Like it worked last time.
And that's the problem with having low IQ, maybe not low IQ, but just not awake, not aware voters in the boomer class that just they have to hate America. They have to hate the enemy there. So we'll see what happens. But if that happens, then it's just more woe and despair.
I think it's like financial education. Yeah. Like I think the financial education is so low, and a lot of the people in the boomer class benefit from the massive expansion in the monetary supply. Mm-hmm. They have houses that they bought for $100,000 that are worth $1 million, and so they benefited from it, and they don't, and they start to think that it's just the spending of today's youth. It's like no. It was like you bought a house with 6 years of median income, and now it's 16 years. Like it's not the avocado toast. Like it's just not. But the financial education is so low, and so there's I think at this point there is no hope of so-called leadership fixing the problem, because no one would actually vote for it. Because nobody would actually understand the solution. They would think the solution is radical. Okay, and so until the financial education increases, like people are like, well, if you don't vote, you're part of the problem. It's like, no, if you're not educating people on the actual numbers, it's like, well, I think you're part of the problem, right?
Yeah, for sure.
And so here's the increase in GDP. Okay, 3 trillion 55 billion to 3 trillion 162 billion. Okay, now the important part about this is like, and it's shocking. It's like, what is the monetary base? And so what is the monetary base? And I'm going from the same time period from March of 24 until March of 2025. Okay. And I'm looking at the M2 money supply, and it increases from 2 trillion 526 billion to 2 trillion 685 billion. Okay. So that is an increase of 6.3%.
That's a lot.
6.3%. So I need you to, people need to overlay those numbers. Okay. So the population goes up by 1.5%. Okay. The wages go up by 1.3%. But the availability, the money supply actually goes up by 6.3%. Okay. So it means the people working for wages have less money available, but the asset holders continue to get enriched, right? And that is how this system functions. And I think it's, rather unfortunate that the report issued from the Bank of Canada doesn't, focus on the M2, the M2 money supply. It doesn't tell you what nominal. It didn't talk about the nominal GDP. Mm-hmm. I understand their rationale to get to real GDP, but you should at least kind of show your work in those steps, because it's important to be critical on those assumptions. And then, we're measuring it in dollars. So how many dollars of that is in existence? It's important to know, right? And you'll start to see it's like there is no growth, zero. There's zero growth, right? All the growth is just fake money printing. Like all of it is just fake money printing. And the question becomes is like, so the solution is like, yeah, you need to educate people on this, but that education is going to take a long path, because you can tell people's education on this because of their financial choices. I can see the products that they buy, right? The financial products that they buy, the underperforming mutual funds sold by the big banks, the reliance on fixed income products that have a rate of return below the creation of the money supply. That they're going to have a negative real rate of return. Okay, the insurance products that are bought that also have a negative real rate of return. And even like life insurance, that's whether it's whole life, that's a poor investment when you consider it on negative real rates, or even as a term insurance where you don't understand the risks, is that it's your insurance payout is a set rate, and what those dollars will buy 10 years from now, 20 years from now is very, very uncertain in this climate. The rate of real inflation is going up. And so when you see this, you're starting to see it's dripping out, and it's convoluted with so much other stuff, but you're starting to see, the governor of the Bank of Canada saying a declining quality of life. The parliamentary budget officer saying that it's a fiscally unsustainable path. Government departments saying that, the entire aspect of social mobility is in question, if it's even available. So it's here, people. So your motivation when you hear that is to stop listening to rhetoric and to start looking at numbers, deeper and deeper into the numbers, starting with the money supply, always reverting it back to the money supply, because you're generally measuring everything in dollars, and you want to know how many of those dollars are in existence and how that relates to the number of people in the country. Okay. And so that's that should be the warning and the action item of people. It's, how do you actually, move this forward, is you have to increase the financial education of yourself and of those around you. Once you do that, then they will make their own choices on who to elect. And once the electorate is more educated, a leader could run on a proper platform that actually might have some meaningful effect on it, because there is none right now. It doesn't like there's no platform out there. It's not the it's not the Liberals, it's not the NDP, it's not the Conservatives, it's not the PPC. Like none of them have a platform. When you start to actually crunch the numbers and what they're saying in the platform, what the problem is, it's like, where is the balanced budget? Where is the balanced budget? Like, where is it, people? It's always 4 years away, 5 years away, 6 years away, right?
Well, don't forget, between 2020, 2023, I mean, they made so much more paper money out of thin air. What was it, like 40% of the money that's in existence was made in that short period of time.
Yes.
Like incredible amounts of money printing.
Yes.
So there was no drawback. There was no stopping from that point on. So, I mean, how are you going to balance a budget when you've got, so much like fake money, so much devaluation of the currency at that point?
Yeah, there's two things. Can you balance a budget, and what did you do to everyone's savings to do it? What did you do to everyone's earning power in order to balance that budget, right? Like there's two aspects of it. And you just know that people don't understand it yet, because if they did, they would make different financial choices. They wouldn't buy the financial products that they do buy now. They would buy other financial products, okay, or other commodities or other assets. They would not be they would take back control from financial institutions who are supposed to manage their money, but they don't, tell them their inherent conflict that they need you to buy, they need you to buy bonds or, investments that are made up of bonds, because they in turn are required to hold bonds as their reserve asset. And so, like, it's this huge, conflict of interest, but they never disclose it, right? And so The important part is like once you start to hear these warnings, listen to these warnings, and then you have to increase your knowledge, because it's not the talking points. And even within that Bank of Canada announcement, there's lots of talking points. When you get to the, how much time was spent on the root problem of productivity, which has been a massive underperformance in Canada for more than a decade now. And so that's a huge issue, right? And once you learn this, like, the hope is that there is a way out, right? Because everything still points to asset price inflation. The increase in the monetary supply and the increase in nominal GDP, okay? Nominal GDP, points towards the increase in asset prices, okay? It moves the money from the people doing the work to the people who own the assets. So as long as the GDP goes up, the asset prices go up, okay? Now, everyone's, the regular working class, it probably means that their size of their piece of pie gets smaller. Their GDP per capita gets smaller, right? Especially any sort of real measure of GDP, it gets smaller. Their purchasing power from their wages gets smaller. But the motivation and the incentive to purchase assets, goes up. It's just which assets you do it and how do you purchase them? How do you leverage the free money to buy real assets? It's like, that's how the systems, worked up, right? And there are solutions. It might not be a feel-good way, but the mistake is the thinking that the next election is going to change it.
Yeah, that's the biggest mistake, is thinking that, and before I used to be a believer in, our democracy, but, just seeing things unfold over the last little bit here is we're not voting our way out of it. So I've become part of the non-voting team.
Yeah.
It's like, there's no point.
Yeah.
There's no point to voting. We're not voting our way out. You just have to take responsibility for yourself, take responsibility for your own financial future, get educated, and start doing something.
Yeah. And so, like, we teach people the path. It's like that path is like, how do I get $100,000 in net investable assets? Get that. What are the strategies that you have to do to get to that first 100K? Okay, great. Now, how do I get to 1.2 million where inflation starts to work for me rather than against me, where I can guarantee myself the median rate of income from the investment returns, just from the cash flow stream from my investments in perpetuity, and that'll maintain the median income in Canada for perpetuity. Whether you want to retire at 30 or 90, it'll give you that income stream if handled correctly for future generations too, right? And then, once you do get that, liquid net worth, so it's, how do you get that first $100,000 in net investable assets? How do you get a net worth of $1.2 million? How do you get a liquid net worth of $1.2 million? Okay. And then looking forward, and we tell people, it's like, with all the craziness, is how do you get some of your net worth in countries that aren't going bankrupt?
Yes.
That is the trajectory, and it's a long trajectory. It's not an easy solution, right? Because that first $100,000 is like really, really hard, right? But once you get the first $100,000, now it's just like, don't mess it up, don't get cute. Right. Keep executing the same boring strategies, right? And there's some ways that you can speed it up, and owning a business and a higher income skill and things like that. But the solution is there for everybody. It's just it's not an easy button, and it's somewhat counterintuitive. It's somewhat counterintuitive because most of the financial products that are out there and that are marketed to benefit the institutions who sell them, not the individual. By nature, they're going to point you towards the ones that are necessary for their survival at this point.
Yes.
And that's where we are. So.
All right. Did you have anything else to share with us today, or is that it for this episode? I
mean, we're super excited for next week to get the budget. What's our new rules? So we had Tiff come out, once 8 times a year to tell us how much our money's worth again, and now we're gonna have the Prime Minister come out and tell us how we're going to change all the accounting rules, and life is going to be glorious and harmonious. So we're going to get that on the 4th, and we'll have a breakdown by next Friday. So, like and subscribe, right? And we're really looking forward to the bootcamp next Saturday. If you're not on the list, make sure you get on the wait list for the next one, because, we break down that path from 100,000 investable assets? How do you get to 100,000? How do you get to that 1.2 million net worth? How do you get to 1.2 million dollars liquid? And then how do you get diversify yourself and get some of that money in other countries so you're not completely beholden to this craziness, whether it be in Canada or in the U.S. is also heavily indebted as well too.
All right. Thanks so much. And we will catch you guys on the next podcast. Thanks.